This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe Rabil. Going to give you a stock market update for Friday morning as of Thursday's close. So we've got some movement taking place, another down day for the S&P and the overall market. We definitely got hit in some different areas. I want to go through that. The market conditions are still showing higher volatility. I want to explain that. And then I want to sort of frame out where I think this wants to go. So we'll do all that and look at a few other things as well. Now, if you're interested in learning some of these techniques, especially MACD and ADX in multiple timeframes, I would suggest starting with the book. I'm offering at a discount right now. Also, if you enjoy the content, please hit that like button and also subscribe. Okay, so let's start with the market conditions. Now, just like what happened at this peak, we had a big jump in the sentiment in terms of more bullishness, all right? And we got this drop, and then when we dropped down, it actually dropped pretty significantly. It went from around 47 down to, I think it was around 26. Okay, so we're starting that process again. We went to 49, which was a new high. It was above so the sentiment was higher here on this last rally. In fact, even into this past week, it was still very high, higher than it was at this peak here. And now it's starting to kind of drift down. We've dropped, the number of bulls dropped down, the number of bears rallied up a little bit, but I'd still put this in the negative camp. I still think there's some risk in this. And, it looks to me, just based on how this is playing out with the sentiment, that we could have a little bit more of a drop in store. I don't think this has worked it off enough. All right. So in terms of the sentiment, I would still put that at negative. Now, the overbought, oversold has worked its way back down just under the 50 mark at 49. So that's the short-term RSI 5 on a weekly basis for the S&P. It was way up here at 90, and it was up above 80 for several weeks, and now has worked off that condition. So I've moved that to neutral. I don't know. I think just based on the current condition, I would like to actually see it get a little bit lower. Where it starts to get interesting is that the volatility has not changed at all. In fact, it's actually getting worse. It's increasing. The size of the bars are getting bigger on both the daily and the weekly. So somewhat of a concern there. Now, when we look at the trend and the momentum, the monthly and the weekly trends are still okay. The daily trend is neutral. It is getting close to switching to the negative camp. And then in terms of momentum, daily had been neutral. The weekly, I shifted to neutral this week, and I'll explain that when we get into that side, when I go through the 4 time frames. But overall, we're still okay from a trend momentum standpoint, from a longer term picture. The shorter term picture is starting to show a few cracks. So somewhat of a concern there, but I'm going to go through that in detail when I switch over to the time frames. All right, let's look at the momentum, because look at what's taking place on the daily volatility. This is just a massive jump, huge jump, massive separation above its moving average, showing that the size of the bars has just rapidly jumped up relative to where it was for a very long time as the market was moving up. Now, when we see increasing volatility, we're thinking increasing risk. All right. Now, when we go to the weekly, it's been a little bit more of a sweeping turn. We had kind of this moving average dropping, it started to lift, and now look at how we tested. So if you did this as a 1, 2, 3 reversal, you have your trend line here. We broke that, and then we had formed a test. This is the 2, which is the test of the low, and now we're clearly turning to the upside. So the volatility, to me, has kind of confirmed a reversal. We never know how long that reversal is going to take place. So what I would suggest to do is draw in your trend line this way, see if we get a 1 to form coming back down. You see what I mean? But for now, we have to assume, and I always look at it like The trend has shifted for now. That's how I would look at it. That keeps you even keeled. You don't get too bearish. You don't get too bullish. Either way, just think of it in those terms. If we get a shift in a trend or anything like that, you say, look, the trend is positive for now. So the trend for the average true range, which is the volatility, is positive, meaning it's increasing, and that's increasing risk. All right, let's switch over because I want to get into how I would frame out what's taking place in this overall pattern. So we finished off the month with a clearly got a doji kind of topping bar to take place for last month for July. All right, and now we're starting off in the red. But notice the way this is playing out. And I really do encourage you, I think if you take my course, you'll understand this a lot more. It'll be a lot clearer. But the way the 4 works in conjunction with the bars is very important. I spend a whole section of the course going through that. If you notice the way this played out, it got a little stretched away, formed this doji, and then opened up here and is now testing this 4. All right, so it's early in the month. We don't know, is it just a test and then this reverses back up and comes back up through the highs? And if that's the case, this will turn green and it'll just look like a test of this support line, of this trend line. So we want to kind of watch and see how this acts. If we get more weakness and we clearly break this line, right, we create a little air underneath it, and extend out this red bar. So it's all red and breaking the 4, and the 4 starts to sort of roll over. Then that kind of increases our odds that we want to come back down to the next support level. So that's something to keep an eye on that will help us in our determination of what we're seeing on the smaller time frames, the weekly and the daily and even the hourly. So keep an eye on that 4 on the monthly after that doji form. All right, now look at what's taking place on the weekly. So I've been saying really since, I don't know, it's been a couple weeks where we got a little stretched away on this, just looked a little tired, had a little small bar here, even though we tried to break out, thinking that there's a pretty good chance we would come back and test this 18-week. It just seemed due for that. Now what's happened is we do have a divergence. Now, it's not that great of a divergence. When you look at the bar count, it's not all that great. It's not like it's a really emphasis type, like a real scary type of divergence in the ADX because it's well above the 25 level. But we do have enough of contraction forming. It's not definitive until this red can move up one more time, but it's getting there. And we do have the MACD crossing down through the signal line. So I felt like there was enough here to move this to neutral because we're so far away from the 0 line. Like if this is all happening close to the 0 line, then it would probably still be positive. I mean, if we still had this taking place, I wouldn't view it as being as negative. But because we're so stretched away, and this is the second cross to the downside with divergence, I'm willing to put that back into the neutral camp. Now, one of the things I would tell you is my target is still kind of looking at this range here. I think there's a pretty good chance we're going to come down somewhere near the 18-week and somewhere near this breakout level. So let me just make sure I'm giving you what that is. Right now on the spider, it's around 524 4.25. All right. So I think that's actually a pretty good target for this to climb. Now, one thing I'll tell you is we've got stocks like Amazon, Nvidia, Microsoft, Google that are all in a corrective pattern. And remember, they're making up a huge portion of these indexes, especially the S&P and the NASDAQ. So it's very possible if they get those going that this is going to slip. It's going to slip through those that support, and it could have something a little bit sharper take place to the downside, especially based on how the sentiment got. And I was getting a lot of questions, not from subscribers who I view as being pretty bright, but like even friends and people that don't, they're more novices when it comes to the market. They seem to be very happy to be buying Nvidia and stuff like that, even though it was stretched away. So I kind of feel like we're in a period where we could see a little pain take place before we're ready to make a near-term bottom. But we're not going to get involved in that as much. I use that as a secondary. I use the sentiment as a secondary indicator as well. I'm not going to make any market calls based on that. And I don't make market calls anyway. But what I'm just telling you is my feeling is they might need to drop this down a little bit more to work off that sentiment and maybe scare people a little bit into maybe shake out a few people in NVIDIA that bought it at the wrong time. All right, now look at what is taking place on the daily. So I mentioned last week how we needed to kind of work. We had the potential to work off this oversold condition because 4 or 5 days ago we were down in here. And now we've turned the 4. See how we went up and tested the 4 and now we've moved up. We got too far away from the 4. So let me just show you this just so you know how this works. You see this 4 here. We tested the 4 as it was turning up. It caused a pretty nice move to the upside. It hit the 18 and now we needed to come back and test the 4 because we had separation. So now we're doing that, but it looks like it's actually re-breaking the 4. You see what I mean? The other thing is that when we get stretched away to the downside and we come down and test the MACD, what I explain to my subscribers is when this comes down, this is support for MACD. It also tends to be support for price action. So we got that to take place. We got a bounce, but now you see how we're just kind of laying on the 0 line? This is not really all that appealing to me when I see this. You see how the red crossed and is holding? It rallied all the way up to the 18, turning down, and it's holding the 25 line. We've got the potential for this to maybe flip over. The other thing I would tell you that I'm looking at that is suggesting some more potential weakness here is the fact that we've stayed above 25. Instead of this flipping over and the blue line just dropping down, we're showing a little bit of strength on the sell side. Now, here's what I'll tell you. We've got a market that's been clued in on what the Fed is going to do. And they've been hoping that the Fed was going to drop rates. But it appears that based on today's data that came through, now they're a little bit more worried that the Fed is too late. All right, the Fed's going to be a little too late, and we could maybe not have a soft landing. Everyone was kind of the opinion, oh, this is going to work out perfect. The Fed's going to drop. Or market's been holding up like a champ and being really strong because it was all going to work out perfectly with no hard landing or anything like that. Now the numbers are starting to show that maybe that's not going to happen. So I just want to explain what's causing this big bar with pretty heavy volume to show up and this kind of a drop off. I think we've flipped. We flipped from looking for a situation where we wanted bad economic data to get the Fed to drop rates. Now they're a little bit worried that the economic data is a little too weak. So this is why it gets really tough to swing trade in this type of environment because each day's data, and we have another one coming in the morning, and we have Apple's earnings and Amazon's earnings. Amazon's already came out. It was down 3 or 4%. I'm not sure what it'll be in the morning of a Friday, but and Apple's coming out at the close sometime here. It'll probably have some type of an impact on the market as well. So a lot of cross currents, but I do believe what people's focus is on, it seems like what's causing the market to move right now has been the Fed, but now they're worried that the Fed maybe has been a little too slow to drop rates, and that the economy might drop down a little bit harder. So you saw stocks that were a little bit more economically sensitive have a rough day in here. We also saw, and I want to point some of this stuff out. So the IWM had the worst day of all of the indices. All right, it was down 3.25%. So that was the worst of the indices. And we don't want to see that necessarily when we get a pullback in a market that's trying to emerge, especially in something like this IWM that was just breaking out. I want to see this outperform even on the way down. So somewhat of a concern to see that take place. All right. So I wanted to make sure I pointed that out. We can look at a few other things. Let's just see real briefly what is taking place with Apple. Apple's down a little bit. I'm not sure if they announced earnings or not, but it's down almost 1% in the aftermarket. Amazon is down 6.5% now. So we've got a little bit of risk, because the reason why I want to go through these are the heavyweights, right? The big names in the market. The fact that this has rallied up and is failing and is now looks like it's going to open below this support zone, this short-term support zone, it's going to put a little pressure on the market. We're going to break the 18-week here, right? We already had divergence. We already had divergence that I don't like in Amazon on a ADX basis. So I think you keep an eye on those big 4, 5, 10 names, the top 10 names. Keep an eye on the IWM. And I think it gives you a real good feel of how long or maybe how deep this type of pullback could last. But for now, let's look for that 524.25 area and see how the market handles it. All right. Have a good week. Let me know if you have any questions. Thanks.